Hey guys, I hope everyone's doing well and having a great day. So, I quickly just wanted to do this video because today I've been doing a lot of work around stacking deals. Currently we're looking at a couple of projects that are a bit more complicated than your standard buy-to-lets or even HMOs. So with that comes needing to upgrade certain things, and what I realised was that my spreadsheet that I use to stack deals in general is very out of date. So I spent the best part of the whole day creating a new one, and through that running some examples of deal stacking, and from that I thought it would be great to do a video on how to stack deals, and in particular what to actually look out for when it comes to doing projects that are a bit more challenging, should I put it, things that are a bit bigger, commercial conversions as an example, mixed use kind of properties. So anything to do with properties that is a bit of different from your buy-to-lets, I want to touch on. And in particular, what I've realised when I was doing this new spreadsheet is how important, even more so, you have to get your numbers right when it comes to modelling any sort of deals and to stack it. Because if you do it wrong, and let's say the spreadsheet you're using throws out some numbers that you go with, but actually it's wrong numbers, it could land you in quite a lot of trouble. So it's always good to double check. I'm the type of person that would triple check and quadruple check certain things, and particularly with the finance side of things and property business, it's extremely important, particularly if you're using lenders, people that are doing angel finance for you, private finance, and even your own capital is at risk. So always recommend you review your numbers. If in doubt, ask someone to help you as well, just to sense check whether you're on the right lines. So whilst I was creating this new spreadsheet, I realised that there are different ways you can stack deals and use leverage in terms of lending and borrowing, and the three main things or three main tools that investors have is important to go through, whether you understand what the risks are involved or any pitfalls to actually look out for when utilizing these tools, right? So the three main tools that I want to cover is, firstly, bridging finance, secondly, development finance, and thirdly, angel finance. So let's go. With bridging finance, it's a tool that is very useful. I think people that haven't used it before might shy away from it. They might think it'll cost a lot of money, or uncertain of what lenders are good or what the process is like. In reality, bridging finance is not that hard to make sense of. It's kind of like if you were to do a mortgage application, you're still going to go through all the procedures with the solicitors and legals and valuations, and until at the end to get your finance out. I would say one of the things to look out for when it comes to bridging finance is your loan to value, because depending on how you service the bridge, usually, for those that don't know, bridging finance is more of a short-term, mid-term kind of lending. Quite often it's around 12 months lending. So it's one of those products where you need an exit. And I'll rephrase that, with all of these kind of products or tools, you need to have exits lined up or know what exits you're going to go for. So this is a conversation you need to have in the beginning with your mortgage broker, whoever's helping you arrange the finance. So with a bridge, advantage, it's got its uses. Usually you're buying something on a bridge that's not mortgageable, so something that's a complete wreck. Or for those that don't know, you can also use a bridge to buy a property, commercial property as an example, that may need planning permission and it actually doesn't have planning permission. So for cases where vendors might not be comfortable with you offering subject to planning and need you to have an unconditional offer, sometimes you can use a bridge to actually purchase the property and then apply for planning for it. Obviously there's risk involved, as in, what if you don't get the planning? So you have to be confident that planning shouldn't be an issue with whatever projects that you go for, because if it is an issue, you might lose the property if you can't exit as such. So bridging is really good for that as well. And another thing to look out for when it comes to bridging is the loan to value, as I mentioned a second ago. Loan to value wise, usually they'll give you a bit lower as well. So if it is, let's say 65, 60, 70% loan to value, I think it's quite rare for 75% unless you want to pay more interest rates on it. But let's say it's 70% loan to value, and you agree to have the interest rolled up. What that means in reality, which I made a mistake previously, is thinking that the net advance that they'll give you, which is the loan on day one, will be 70%, and then your interest is at the end. In reality, what bridging lenders actually do to de-risk or cover themselves or have you guys put more skin in the game is that they actually will take off the bridging fees, the interest rates up front. So actually what you're left with is a lot lower net than what you think you originally would get. So don't let the flashy headlines saying, oh, you can get 70% loan to value on a bridge make you think that you only need 30%, because in reality, if you do the maths, you might still need to plug a hole of a deposit, which is maybe 55, 60% of a hole. Sorry, let me rephrase that. Maybe at least 50% to 40% of the hole you might need to plug. So that could, again, for chunkier numbers, throw your numbers out. So I think that's one thing to be aware of. Secondly, so that's for bridge. Secondly, for development finance, this is lending where, let's say you've got planning, and then you can get the lending for development finance, which can also cover for the cost of the refurbishment. So it's not just the purchase of the property. So what you would use a development finance for is to come in and basically take over the bridge, or unless it's a lender that can do both, and essentially they would give you whatever percentage of the purchase price of the property and essentially fund the rest for the refurbishments, which is something that you need to come up with you and your builder, your contractor, QS, those kind of professionals that you do to create a schedule works essentially. But they can fund up to 100%. But again, there's a caveat to that, and again, it's something that I had to learn through experience that hopefully with this video you guys will be aware of, that so you don't fall into the same trap. So what I thought was 100% finance was that they will give you an advance from day one to start the works. So let's say refurbishment cost was 100k. I thought that they might forward you 20% of that 100k, which is 100%. Of the refurbishment works, and you can start off with the project. In reality, it's not that easy as a lot of things. So what happens in reality is they would actually pay out, that's true, but in arrears. So what happens is you actually need your own 20k from somewhere to start the works, and once you've done the works up to a stage, then a valuer would come out to verify that X amount of percentage have been done for this project, and then they'll release a certain amount of funds. So in this case, let's say you put 20k into the project, it increases the value of the project, the site, the project, or whatever it is, the building, by 20k. Then the valuer will come out, verify it, and ask the lender to release the first lot of monies to you. So in essence, yes, you can get up to 100% lending, but you still need a deposit yourselves to get the work going, and that amount as well is variable. You need to discuss with the valuer and the lender at what stage should you be asking for a drawdown. So again, that could actually, if you're depending on monies from day one, actually kind of put a spanner in the works, and it won't be too good of a position to be if that does happen. And then that's one of the things to look out for. And finally, what I want to touch on is angel finance, which is kind of like the holy grail of lending, because angel finance usually is made up of individuals rather than going to these big banks and institutions where you have to jump through a lot of hoops. Individuals are a lot easier to work with. You have paperwork obviously involved, but you're not talking to a big establishment where they don't really care, essentially. So with your angel financiers, you're able to negotiate better. You can talk through things. Communication is key here, because ultimately you're talking to a person and finding out what they want and creating a situation where it's a win for everyone, really. And things to be looking out for when using angel finance, as with any project, is to make sure that you've got your exit strategy covered. So at the end of the day, with angel financiers, you have to treat it like any investor, any lender, and think about how you're going to get the investments and monies back out in the end to repay your angels plus the interest. And hopefully they're so happy that they want to go again and lend the funds to you again for round 2. That is the most ideal situation. So you have to make sure that you've got your exits, whether it's selling the property or refinancing. It's making sure that these numbers are as accurate as possible, and that's where your due diligence and homework comes in, and that's where the hard part is. But if you're able to crack it and have the experience, or ask others to help you, or you've got a mentor that has done this before, which would be a great help. Usually they can guide you in the right direction in terms of whether you're on the right track or not. So I remember watching something on social media today from a good friend talking about building bridges, and that's what essentially it is. If you work with someone that's more experienced, you effectively build a bridge over the downsides of doing it yourself, basically. So working with other people or having mentors is a great idea, basically. But yeah, so with all these different tools, you can use combinations of them as well. So it's not like you use one tool and you don't touch the other two. You can combine things together. So as an example, for some of the projects, what I would be looking at combining would be using a bridge to purchase the property, and then using angel finance to fund the development rather than using development finance, because I find that numbers wise, that could be a cheaper option for me as a developer. But again, there's so many combinations that you can do. It really does depend on you as an investor, and also the type of deals, what lending you can get, the criteria, what is the return on the end, what is your outcome. So there's so much you have to take into account when it comes to stacking deals. I mean, and this is just a little snippet of the thoughts I've been going through my head as I've been working on my spreadsheet that's taken a day and a bit. So yeah, I mean, I just wanted to share this with you guys. Hopefully it's been helpful, it's been useful. Financing isn't hard in any sense. It's a lot easier once you've gone through the process, but it is tricky to get your head around, especially in the beginning, about what is possible and what isn't possible. And sometimes brokers aren't the best at communicating this or giving you the idea, and making sure you 100% understand what your risks are and how to approach the structured deals and the lending. So just wanted to get this video out and tell you guys what it's like from the perspective of an actual investor, and how we see using lenders for our projects. So I hope, again, this has been useful. I hope you guys have a great day. If there's any questions, feel free to let me know as well. If you want to expand on this topic, or if you think I'm missing anything, please let me know in the comments. I'm always looking forward to getting better myself and learning more myself, and I learn from you guys, a lot of you who's experienced a lot more than what I have in your own way. So I'm keen to hear from you guys as well. So if you've got any advice as well, let me know in the comments, engage with me. If you like this video, please like it, share it with anyone you think would be useful. But yeah, I will see you guys soon, and have a great day.